Hello, my name is Steve Bigelow with the Candlestick Forum. Obviously, the market is in a downtrend. And this is what makes your investment anxiety go away, is when you can analyze fairly easily the reversal signals. Notice how there was a gap up in the overbought condition, and the next day they did kind of a tweezer top and came back down through that level back to the T-line. This is immediate information that the bulls are not taking this trend up anymore. That's when you can start going short or adding short positions to the portfolio. I say this not from a voice of sage advice, but from a voice of experience, that if I was long positions before candlestick analysis came along, I'm thinking, oh, maybe they're just pulling it back. I'll hold on to things and hopefully we'll go higher. Well, now I know that once you start seeing sell signals, especially in the overbought conditions, in the indexes, start going the opposite direction or start going short, because the candlestick charts are telling you exactly what investor sentiment is doing. Now we're looking for our next anticipated target, which is down here at the 200-day moving average on the NASDAQ. This is making the semiconductors, oops, I guess I did that wrong, home builders, both shorts, and the metals are strong. So this is pretty evident when you do some very simple scans that not only can the candlestick charts tell you which stocks are acting the strongest or weakness, but that same analysis can be done on the indexes or the ETFs. So we could see that the home builders are selling off, as we see in Toll Brothers. Things like Home Depot are selling off. There's your bearish engulfing signal, bearish engulfing signal. What's your additional analysis? When they got back up here to the top at resistance level, they started selling off. The probabilities are they're heading lower. And this is what we call a dagwood in the semiconductors. We recommended going short on Wolf. That's an evening star followed by a doji sandwich. Remember, our McMuffin is a morning star followed by a doji sandwich, or your morning sandwich. A dagwood is your evening star followed by a bearish doji sandwich, or your evening sandwich, a dagwood. Again, all of this information implies that if the candlestick sell signal itself, the evening star signal, the Japanese rice traders say that's implying a downtrend. And we know that a doji sandwich implies more direction. You combine those two, and then you have the fact that they did it right at a resistance level that everybody could see, the 50-day moving average. That tells you you've got extremely good probabilities are heading in a downward direction. And what's your potential target? If this is wave 1, this is wave 2, failure at the 50. Wave 3 could be the same magnitude as wave 1. Again, this is not rocket science. This is merely analyzing what the Japanese rice traders have illustrated, that what the nature of human nature patterns produce. So numerous semiconductor stocks are producing very strong sell signals. Here's your bearish left-right combo, failure at this level. Doji sandwich that closed below the T-line. A doji sandwich that closed below the last of any support. Assume you're still in a downtrend until you see where they're going. Potential target, fill in the gap down here at the 200-day moving average. Now, does that necessarily mean that's where it's going to go? Obviously not. That's just a potential target, which makes that a short position that's worthwhile. What is the criteria for closing out a short position? When you see a buy signal. So the metals are showing bullish charts, as we can see in Alcoa. 2+2 analysis. There's our best friend signal, producing a little scoop J-hook pattern. Look, because of the best friend signal, implying there's going to be more upside. That's where we can analyze if that looks like a J-hook pattern about ready to begin. Same scenario here on Vail. We recommended this because look how it broke out through this level. Also with doji type trades, bullish trades, wave 1, wave 2, wave 3, the same magnitude as wave 1. So it's very simple analysis, what we call 2+2. When we can see patterns like a dumpling top, which is the opposite of your fry pan bottom, and we can see a doji sandwich, which implies more downside, the same expectation that we would expect from a fry pan bottom is a big up move. Same scenario on a dumpling top. This is the buildup of bearish sentiment. That's what creates the strong down move potential. So right now, obviously with the indexes trading below the T-line, this is where you can use common sense candlestick analysis. 1, sell signals in the overbought area. 2, close below the T-line. And 3, no buy signals yet. So the observation now is, will it support at this level or is it heading in this direction? So another simple analysis along with that criteria is when you do the simple scanning techniques for finding the best short and the best long situations, if you're finding a heck of a lot more good short trades, that's another subtle indication that the bears are definitely in control of this market. So we are going to be doing a power signal training, a mini spotlight training on Saturday, January 15th, this coming Saturday. Again, these 1 to 2 hour sessions provide a lot of insights as to if we're in a downtrend, sell signals work, but strong sell signals are even better. Those are the power signals we're looking for. So come join us. That'll be it. We'll see you in the chat rooms.